Okay, good morning everyone and welcome for today's financial hearing with Clas Ohlson. Also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Niklas Färm from SEB Equity Research. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you very much, and let me of course also welcome you all to our financial hearing, but also welcome you to Clas Ohlson and our store in Drottninggatan. We will cover today the third quarter, our large quarter for the fiscal 15-16. We'll also go through the first 9 months, as well as giving you some highlights of what have happened after the events of this period, as well as give you a future outlook. I will try to give you a brief on this, but also have our CFO, Göran Melin, with me if you have any kind of questions that I could need some help with. But if I just give you a quick update of where we are right now at this stage. We still have high energy and we are still going forward in somewhat fast speed. We have now 205 stores in our network in our 5 countries, and we are rolling 12 sales is now up at 7.6 billion SEK. If I should try to give one highlight or a few highlights of regarding the report that we just released this morning. First of all, of course, I have to mention that despite some major currency headwinds, we are delivering an all-time high sales and profit for a quarter in Clas Ohlson's history. Also, of course, that I have to say that we are positive with the general sales trend that we have seen in all our sales channels, and particularly, I would say, with a more favorable sales mix during this period. And finally, I have to mention that we are reaching a new or another milestone in our history related to our loyal customer base that we have in our Club Clas, but I'll come back to that later on in the presentation. So let's go into the key ratios for the third quarter. And if we go to the sales and sales numbers, in total we are up 7%. I would say that we are delivering a healthy like-for-like with +4%. We have some currency challenges, so in SEK we are up 4%, and included in our store network now is 9 more stores compared to last year. But we also have done 4 store openings during this period, and you'll find and you'll see them here on the chart. We opened up 1 store in Finland, 2 stores in Sweden, and one of them was the store in Mall of Scandinavia, the large shopping mall here outside Stockholm. But we also opened up the new small format outside London in Ealing, and I'll come back to make a few comments about that a little bit later on. So, sales share per market is still fairly, I would say, the same as you've seen the last few quarters. Somewhat, Norway, due to the currency changes, is somewhat down, but in general, we are more or less the same kind of sales shares. And if we then go into by market and the development by market for Clas Ohlson, and we start with the largest market, Sweden. A few comments in the general comments about the market. It's fairly stable consumer confidence. Also, of course, see that that's also reflected in a fairly positive retail environment at this stage, with fairly healthy growth in the total trade. Now, how has that been reflected for Clas Ohlson? Well, we are gaining market shares in this fairly strong market. We are up 7% in total in Sweden. We have 2 more stores, and I think we have had a positive Christmas period in Sweden in our largest market, which of course is pleasing. Moving then to our second largest market, Norway. As you see on this chart, there is generally a very soft consumer confidence at this stage, but it's not fully reflected in the overall retail spending. And we are clearly gaining market shares in this market, where we are growing with 8% in local currency in the Norwegian market. However, as you also see that we are reporting a flat sales in Swedish krona, which is of course a result of the currency impact that we're now seeing versus the SEK. We have in the period 2 more stores in the network. We haven't opened up any stores in the quarter, but we have closed 1 smaller format in end of December. But again, we are increasing clearly market shares in this market, even if it's fairly volatile at this stage. Going then to Finland, Finland continued to, from a consumer confidence perspective, be fairly volatile and fairly soft. And also in general terms, retail spending is also soft in this market. But we have to say, and I think that's clearly on this chart as well, it's pleasing to see that in this quarter we've seen some kind of uplift and a trend that goes in the right direction in the Finnish retail spending, which of course is pleasing to note. Now, how has that been reflected in Clas Ohlson? Well, as you know, we have had a very strong track record over the last quarters in Finland, and it's of course pleasing to see that this trend continue. We are growing 13% in the quarter in local currencies and 13% in SEK, and we continue to really increase our market shares in this market and strengthening our brand position in Finland. Moving on to UK, confidence in general terms, fairly stable in the UK. However, retail spending has been soft, and as you can see, it's been on a softer trend over the last quarters, and we'll saw clearly a soft period as well in the third quarter in general terms in the UK, mainly related to less traffic out on the high street. How has that been reflected in Clas Ohlson? Well, we have followed somewhat the market where we are reporting a somewhat down like-for-like in the UK, but we have opened up the smaller store formats, which we have seen an encouraging start, and will continue to develop these stores, which of course is pleasing. In SEK, we are reporting a 2% growth. Here we've had some positive currency effects. And then I would like to comment on these stores that we have in Dubai, which is performing really, really good. And we continue to look for, together with our franchising partner in the UAE region, to look for the second store. That goes for the sales ratios. Then let's move into the gross margin. The outcome of our gross margin this quarter is 0.5 percentage point down to 43.7, which of course is a clear impact of the currency. But it's also somewhat better than our own expectation. We've seen really positive effects from our sales mix and also from the lowering sourcing cost. But we had seen also support from the currency hedging. And I will go through this a little bit more in detail. Regarding the currency impact, as we have seen over, I would say, the last year, it's been a clear negative trend for us related to the currency development. The dollar has clearly strengthened, as well as the important Norwegian krona has gone in the other direction. As you can see in this chart, we have now, regarding to the dollar, we have now seen this been stabilized on a new level. And if I compare it regarding the last months, we have now more or less mitigated the majority of the dollar impact, not compared to last year, but compared to the last months. However, if you look at the NOK, that continued to be a challenge as it is continued to weaken versus the last months. Now, we've had hedging effects in this quarter, as I stated, and here you can clearly see also the positive hedging that we've seen, where we are hedging 6 months on a historical level. So we are seeing positive hedges that will fade out. Everything else is equal in this perspective. But also said that we are working in many areas, and the sales mix has been positive. We continue to drive our product development and our category mix. We continue as well to see positive or encouraging development regarding our private labels. Last time we reported a strong private label growth. We've seen also in this third quarter a positive uplift on our private label as a share of sales, relates to the efforts that we are doing in terms of quality and design in general terms for the range of our private labels. And we continue as well to track and follow the pricing in the market regarding to the changes in currency, and we follow that in line with the rest of the industry. And I also would like to emphasize the efforts that we also see in regarding to sourcing efficiency. We started almost a year ago relating to some of the changes we saw in raw material, some of the impacts we saw as well in terms of general capacity. And I think we've seen positive effects around this in terms of how we have been able to work with our suppliers to reduce the cost in efficiency gains, but also general cost reductions, and also supported then by the local Chinese currencies impact versus the dollar has also been positive and favorable for us that we've been able to capitalize on. I'll move on from the gross margin and comment on the share of selling expense. We are down 1 percentage point to 26.3, which is major, really an impact from the positive like-for-like sales. So we are getting an effect of the strong like-for-like, but also a result of more efficient marketing, as well as we continue to have a good cost control in the company. So this summarize the key ratios up to that we are again delivering an all-time high profit at 382 million SEK, which is up 9% versus last year, and an operating margin on 15.4 percentage points. Again, this is our strongest quarter, so it is a healthy development for us in this period. I think this summarizes the third quarter, but let me just then quickly sum up the first 9 months in our fiscal year. Sales, more or less the same pattern. We are up 7%. Like-for-like is up 3% the first 9 months. In SEK is up 5 due to the currency. We have 9 more stores in the period versus last year we had 14. And we've done some store openings. We've also closed a couple of stores. One, again, the smaller one in Norway, as well as the store in UK outside Birmingham. Profit sums up to 633 million SEK. Obviously, also this is also adding up to the strongest 9 months we've had so far, at an operating margin on 10.4. We continue to invest in this period. So far, we have invested 198 million SEK, somewhat up versus last year. We are investing in new stores. We're also investing in refurbishing our store network, as well as we are in the program in our ERP program, where we are investing today in our IT system and our IT platform. So this total adds up to 100 million SEK on the IT system in this period. And we have a very strong cash flow. Cash flow from the operating activities at slightly above 900 million SEK, up versus last year. If you look at the inventory levels, they are up versus last year. Relates to obviously somewhat more stores in the network, but clearly also relates to the higher dollar, which also then results in a lower turnover on a distribution center from an inventory point of view. But we are confident regarding to the levels that we have in our inventories at this stage. This gives us a net cash holding of 861 million SEK compared to over 670 million last year. So that was the first 9 months in terms of financials. Now, what have then happened after the period end? One of the things that you tend to follow and track is our monthly sales. February came in at 3% growth in SEK, But if you look at it by local currency, we're up 8%. So we've had a positive start from a local growth perspective in our local currencies, where we're up in all markets, and we're seeing a positive trend in all markets. Obviously also influenced by the leap effect that we've seen this year in February. However, as you can see, we are reporting an 8% in local currency, but 3% in SEK. That gives you the reflection of the currency situation we are facing, particularly regarding the Norwegian krona at this stage. What else? Well, after the successful launch of the paint category that we have added to our range, we have now also in February, we've added the wallpaper, which we think is a very interesting category to move into. We've had a positive start. We have a base range of quality wallpapers, and then we also have had an extended range that we're offering through on the online channel. So we are really pleased to move further into this important category. Now, also very pleased to announce that, as I mentioned in the beginning, we reached another milestone in the company. We are now having more than 2 million members in our Club Clas program. We started fairly late, as you know, in terms of having a club program, but it's also fantastic to see the acceptance and how many customers is willing or interested in joining this program for us. And this morning, this program is also being nominated as the Loyalty Program of the Year through Retail Awards, which of course is interesting, and we are pleased to see that. Today, we've also kicking off the battery hunt, which is part of our sustainability program, where we are encouraging and working together with the fourth grades school program that in Norway and Sweden to collect used batteries. A small reminder, last year we collected over 370 tons of used batteries in these two countries, and I think all these fantastic school kids are motivated to beat that record, and I'm confident that they will do that. So it's a very positive program that we're starting up. Let me then close the presentation by providing you a few comments related to our future outlook. The obvious one, and I'm sure it's going to be some questions around that as well, regarding currency and currency impact. This continues to, of course, to be a challenge, even if we now see the dollar has been more stabilized, but the Norwegian krona is still, compared to last year, on a significantly lower level. So this is a challenge. However, I think as we have stated over the year now, we are clearly and we are keeping our strategy in terms of how we are working on these, in terms of that we are monitoring the price development in the market. We are working hard to optimize our sales mix, as well as doing what we can to increase our sourcing efficiencies to able to mitigate these challenges that we face from a currency perspective. We're also announcing today that we are continuing our growth of new stores. This year we had a span of 10 to 15 stores that we wanted to add, and as it looks at this stage, we still have 1.5 months to go in the fiscal year, but as it looks right now, we're going to add 10 stores, so in the lower end of the span for 15-16. We're announcing today that next year we keep in the span, we're going to open up 10 to 15 new stores for the fiscal year 16-17. And part of these stores is, of course, for us, the excitement of entering Germany. We are very excited about this launch. I think I've said it and I can repeat it. We have contracted 3 stores. The first one is going to be in Jungfernstieg on the high street in the center of Hamburg, where we plan now to open up the store in May. We're then going to follow that up in the fall in Altona, which is just outside Hamburg city. And then we're going to, in the same period or in the fall, a little bit later in the fall, we're going to open up Alstertal, which is the largest shopping mall in Hamburg. So we are really pleased with the store, with the launch plan that we have set up. And in the nearest one, of course, is then, this is not the latest picture of the store. It's getting developed and it's getting soon ready to be opened up. It's just 2 months from the launch. That the large opening is going to be on May 19th in Hamburg, and we are all very excited about this plan and this progress. So I think that sums up my part of the presentation. If I should make some kind of summary notes, again, I'm repeating that we are leaving a strong quarter behind us, and I think we have a lot of energy for some of the future activities that we're planning to do, as well as we continue to have a very strong financial position in the company. With that, Niklas, I welcome you up to stage for leading the Q&A session.
Thank you very much. Thank you very much, Clas. Thanks for a good presentation. My name is Niklas Färm. I'm the retail analyst with SEB Equity Research. It's a pleasure to be here. Thank you for inviting me. So I want to start the session by looking at this brief graph. It shows you the gross margin over the past 10 years. Obviously, if you look at the blue line, it's been quite a steady journey in basically one direction, lifting margins from low 40s to high 43s at the peak most recently. And the red line shows my assumptions for the theoretical impact from the US dollar. And my take is that there's been a fairly strong correlation in the past. And that would be my first question, just to establish that. Would you agree that the correlation between the gross margin and the currency impact has been, over the past 10, 15 years, fairly strong? Clas?
Well, I think, not sure I've to follow your graph here, I understand your theoretical view on this, but of course that if I look at our progress over the last 10 years, it's not related to currency that we have lifted up, if that's your question. I think that what we have done some progress in terms of how we are looking at particularly the sales mix. If I look 10 years back, I think we're at private label share of sales at 13-14%. We are now up at getting closer to 30. We have invested in our own sourcing offices in Asia, so we're taking some steps relates to that. So there are, of course, a lot of these activities that has supported this. Then, of course, as we always stated, currencies has some impact, but over time we tend to balance that together with the industry, because of course that is impacting everyone.
That's sort of the answer I was hoping for. Oh. So then the question is, as the US dollar now probably bounces back, at least year over year, 1 year out it will be flat year on year by definition, then the question is, to what extent we should not anticipate a continuing increase in the gross margins. Why should you not be at 44% or 45 actually, or 46 for that matter? Mm-hmm. Because what you're telling us is that a lot of the work you've done is structural, it's not cyclical.
No, it's true, but also the structural is given us and is taking us to this level, of course. Then you are saying, can you do more structural changes? And I think what we've said, the larger part of taking ourselves outside in terms of being more efficient on the sourcing, we've taken the larger steps on that. But as we are seeing and as we're continuing, of course, this is a work day by day to continue to improve in these areas. I think then you can say, will we do another leap effect on our private label share? So we will double that. I'm not sure we're going to do that. That's the customers who's deciding that part. But I'm confident as well that we'll continue to see that the share of sales to increase. Now, I'm not sure it's going to be that high though. So the mix again is important for us in terms of that we offer the broad range. that the customer that you're able to select. And so we're not going to force it up to some levels, but I think it will. The better we are in terms of offering the guarantees, the qualities, the design of our private label, I think the customers will reward us for it.
But even so, I mean, let's just assume that we're in ballpark terms, right? Right now, the US dollar is pressuring your gross margins by maybe up to 4 full percentage points. So if that disappears,
Well,
all else equal, I suppose.
But I think, yeah, but if it disappears, it doesn't. I mean, what we have seen and what we have done, and I think I mentioned that as well, we have mitigated a major part of that in terms of these 3 areas that we worked on. So that compared to last month's, not compared to last year, but compared to last month. And of course, if we are now up on a better level, then of course, then what will happen then later on? If the dollars then changes and it goes down, if that's what you're saying, then of course over time that could impact. But I'm sure that's also going to impact pricing in the industry as well.
Final question before I hand over to the floor. It seems perhaps, I mean, who knows, but maybe the peak in the currency headwinds are now behind us. But at the same time, you just educated us and said we have some hedging effects here that are perhaps sort of bolstering current developments. Could you just make me understand to what extent we should not be too optimistic on forecasting the peak here, right here and now, but rather actually be more cautious on gross margins the coming, say, 2 quarters?
No, but I think we are transparent in terms of what we are seeing. And again, if you look at the dollar impact, that is one area. But I think right now, if you just follow the Norwegian krona, then compared to last year, you can just see the impact it has on our sales. Of course, that has an impact. And we are now seeing favorable hedges around that. But these keeping on the same levels, the hedges will fade out. Now, again, coming back to there are many areas that are impacting our gross margin over time, or that we're working on. So there are many areas that is impacting the total gross margin. But from a pure hedging point of view, everything else equal, that's going to be less supportive for the coming months.
What could you just quickly remind us on the hedging policy? Is this delaying things by about 6 months?
Around 6 months, yeah.
Okay. So in 6 months' time, we will see the impact from a 8-9% weaker krona feeding through to earnings. Yeah. All right. Thank you very much. Who wants to start? Niklas.
Hello, Niklas Ekman here from Carnegie. I'm curious if you can elaborate a little bit on these investments you're doing in your IT system. We've touched upon this in previous quarterly presentations, but it would still be interesting. I mean, we're not seeing right now, apart from CapEx, you're not seeing any disruptions in your productivity right now. What kind of benefits are you expecting when this is completed? How old is the system you have today that is being replaced by the new system? If you could just elaborate so we can understand the magnitude of these investments and what kind of benefits you expect.
I'll try to do that short because explaining an IT system quickly is not as easy. But I think if you look at it, we have an old platform currently that we have partly also developed ourselves. Now we're moving into a more standardized system. We have set out that's going to take 5 years to change the base platform for this. We are in the middle of this. We have said it's going to cost us around 50 to 70 million over a 5-year period. The investment will go a bit up and down, and during this period will not be equally flat every time or every year. Now, of course, then you're coming into the benefit. Of course, we look forward to that. You are getting into some of the things that we do today, manually in terms of basic planning, retail forecasting, and so forth. Will be able for us to trim the operations even further, of course, when we have set this system in place. So that's part of the benefits. The other part of the benefits are, of course, that we need a new platform to be able to manage our future growth of handling. Over time, we will have more distribution centers. We need a new system to handle more, to get efficiency around that. When you're not having one center, they have two, etc. To handle the omni-channel perspective over time will also require new and modern systems. So it's partly of getting more efficient, but it's also partly to invest for the future to be able to take into some of the opportunities we see going forward.
One reason I'm asking is because we've seen from several other companies going through this transformation, both examples of companies that have severely underperformed when they are going through the change, and other companies that have seen tremendous improvements when they have gone through. So I'm trying to understand just this magnitude if you compare it to other companies going through.
And you see the others more than I do, apparently, in that perspective. But I think, of course, it's to go through this kind of program is always an effort. Now we have not said we're going to do this in 1-2 years. We actually said it's going to take 5 years. That part of that is to be able to plan it, so we're not getting any discrepancies as such. But of course, that's I'm sure it's going to be some hiccups when we're moving into. But we, of course, we do everything we can to avoid that. And then when you have this system in place, then it's up to us then to see how we can trim the operation and use the systems. But that's not only systems, that's also part of how you operate in your whole operation. But I'm not going to give you a number on that if that's what you're asking.
That's fine, thanks. You mentioned yourself here a second distribution center. What are your plans here? Because you've talked about this many years ago already. How much more can you expand? How many more stores can your current distribution center handle? And when do you think a second distribution center would be needed?
No, I think we have done a lot of positive efforts in the current distribution center from the original investment that we took. We said we're going to handle 150 stores. Now we are over 200, and I'm sure we're going to be able to handle up to 250 stores in this. So we will be able to handle the stores needed as we see it today in the Nordic region. When I'm talking about the second distribution center, of course, that is when we are successful outside the Nordics, when we start to see a further future growth about significantly more stores and a significantly higher capacity needed, then we need to add up another distribution center to handle that. And of course, then we need a system to be able to work on it so we can do that in an efficient way.
Okay, great. Also, can you talk a little bit about Germany here? What will be done differently compared? What lessons you've learned from the UK in terms of expansion pace, in terms of how you try to position Clas Ohlson relative to what you did in the UK?
Well, I think first of all, every market is unique, and I think that's clearly, and we're not going to go back to when we open up UK and the market challenges that we faced at the time. But of course, we have also learned. We're not only learned from the UK, we've learned from Finland as well. And I think if you look at the plans at this stage, we are going into one city. We're going into Hamburg. We're adding actually 3 stores in one city at the launch, and we're going to build our base from there before we then say we're going to move on further out in Germany. So it's more concentrated. We are making a more bigger impact in one city rather than spreading out.
And what kind of evaluation period are we looking at? Is this 3 stores now for the next 2 to 3 years before you go forward?
I think it's reasonable to say that at least you need a couple of years before you can make a full evaluation. And of course, then we'll all follow and see. We know that our concept is very strong, and but it's also somewhat unique. And we've seen that in other markets. It takes some time. So we need to allow it to give it some time as well. But of course, of course, we expect and hope to see fast growth in this. But also, we are also respectful in terms of time it will take to learn and to have the German customers to learn Clas Ohlson.
Excellent. Thank you.
I just have a follow-up question there on Niklas's question on Germany. Clas, when you're budgeting the expansion or the setup in Germany, is there any sort of difference that you could help us with when we're trying to forecast this now compared to when you actually launched in the UK and in Finland? I think it's fair to say you expected a higher sales per store in Finland than perhaps originally, or eventually came out of it.
In Finland?
Yeah. Are there any is there any reason for why space conversion will be better or worse in Germany compared to other non-Scandi markets?
No, there are no reason regarding to that there will be any difference on that. But again, coming back to, if you take Finland as an example, you see the pace that we are facing at this stage. It has taken some time before you come up to the average of sales per square meter. So initially, I'm sure it's going to be lower, but then we're going to grow it over time.
So if we look at Finland and the UK expansions, that could be a good proxy for forecasting the German stores initially.
You know, I'm not going to give you a detailed answer on that. So I think you have to work on your forecasting model. But of course, what I'm saying is that entering a new market, you will ending up with initially you'll have a lower sales per square initially. That I think is as per expectation. But then we need to work on how to fastly grow that. I think the one comment you can say relates to the UK. When we open up the UK, we had somewhat larger stores initially, which was also part of the opportunity to get into really strong locations based on what happened in the market in general terms from some other retailers. If you look at the launch plan that we have now, yes, we have one, call it the flagship store on Jungfernstieg, but outside that we are more into more normal store space rather than these large outlets.
Thank you, Clas. So is there, before we move on in the floor, is there any question from the conference call operator, please?
Ladies and gentlemen, I remind you to press 01 if you have a question for the speaker. And there are no questions registered at this moment in time.
Okay, thank you, operator. Next question, please.
Stellan Hellström with Nordea. Just a question on your store expansion. Now you're keeping the target for store growth for the next fiscal year, and the majority of that growth is still taking place in your sort of existing Nordic markets. I was just wondering if you can say something on the potential you see here going forward. I mean, I think you've said before that you are seeing a maturity or in the existing Nordic market, but also then you're keeping a very high or a rather high rate of expansion still. So I'm just thinking, do you see more growth now than when you have smaller stores, or should we expect that to come down going forward?
Well, I think, I'm not sure the high rate, if you look at it from a base of 200 stores, of course the rate is significantly lower versus what we have seen, but we still see opportunities. If I just take Sweden and you say you open up Mall of Scandinavia, that is, so there are still areas where we can fill up. We also seeing the opportunity to complement with various formats in the Nordic markets. So there will still be some white spaces and some opportunities to add on, but again, it will not be kind of the percentage of new stores in the Nordics that we've seen in the past. Now, if I keep to the lower bracket and you're saying in the span, this stage, we have 30% outside Nordic just with the 3 stores in Germany. So of course that future growth of number of stores will come outside Nordic over time.
I think also you said before that you saw the greatest opportunity to grow in the Nordics in Finland, although you're still keeping a fairly low rate of expansion in Finland. Is there any, but still, and also you're doing quite well in Finland, so I'm just thinking.
No, I think yes, but we are adding more stores in Finland and we'll continue to add more stores in Finland. But I also think we said, I know we did, Finland has gone through some rough time and we also been cautious of looking where Finland is going, and hopefully we'll see Finland now from a general market point of view encouraging the last quarter of turning up. That would also, but we are tracking this as well, so to have a cautious plan. But we are adding more stores in Finland and we'll continue to do that, particularly also if you look at from the base, we have significantly lower number of stores in Finland versus Sweden and Norway.
Okay, thank you.
Any more questions from the floor at this stage? Okay. Can I continue also following up on the previous question here a bit, but from a like-for-like perspective? What do you think, Clas, typically a comparable store sales development would have some link, being a household brand, would have some link to overall private consumption growth, I suppose. However, you have had a very strong growth in Sweden for many, many decades now, obviously. Perhaps entering into somewhat another phase from here on going forward. What do you actually think could be a sort of, what is a good like-for-like performance for the coming years? Assuming that you don't necessarily focus on growing the Swedish business.
No, but I think what we said, you see in our financial targets that we want to grow minimum 2%, and I think that's kind of, we want to see at least 2 to 3% growth from a like-for-like perspective. I think that's also reflecting somewhat, if you have a normal market, you should see some kind of growth. And of course, then it's up to us, I think, coming back to, if you take the perspective in just Sweden, the magnitude of increased competition we've seen over the, you showed your graph, and if you just take 10 years back, the sales space that has moved out in this market has been significantly more than the overall total growth. Adding on the international e-com business on top of that, of course, the competition is tougher. But I think for us, we want to see at least 2 to 3% growth from a general terms in terms of like-for-like moving forward. But it requires even more from us to meet and to do, as I think I mentioned that today, we are very pleased of the customer feedback we are getting, not only in terms of number of loyal members in our club, but also the research we do in terms of how we are meeting and how we are adapting into this. And we'll have to continue to work hard on these areas to be able to deliver these numbers.
If you grow along the lines of 2 to 3%, do you think that you are growing along with the Swedish market?
Well, if you're asking me to forecast where the Swedish market is going, I think that's there are many variables in that. I think we are seeing at this stage growing population in Sweden, which I think handling it right, it will be very positive for the Swedish market. So of course that if we're getting an overall positive trend in general, I think that will be positive for us. We are a value retailer. I think the benefit we see is not necessarily you tend to come into the kind of building constructions, but it's very much in terms of when customers are moving, when they are changing their living. That's beneficial for us in terms of the fixing that needs to be done in this at this stage is positive.
I believe this is the 10th consecutive quarter with positive like-for-likes, actually, Q3 2015-16. Who are you gaining market share from?
Well, I think it's important to say, like-for-like is not market share driven.
No,
the total sales is, and sometimes I see that kind of correlation. Total sales is where we, and I think now who are we gaining from? I think we are taking it from again coming back to the mix that we have in one area with the efficient way of reaching our customers. You're getting it from many. It's not that it's one single one.
We have a follow-up question from Niklas first.
Thanks. Yeah, coming back to this like-for-like trend, I'm curious because, like Niklas said here, the last 2.5 years you have seen a good like-for-like development that's been around 2 to 3%. But if you go before that, you had 5-6 years of weak or even negative like-for-like growth. And I'm curious what is different now in the last 2.5 years. I guess one thing is that your expansion pace in the Nordics is a little lower. There was initially a lot of speculation that you were raising prices more than you had in the past. But what's different? Because it's a pretty clear cutoff point where like-for-like was weaker and suddenly it's stronger.
Yeah, and I think just to say, I don't think it was 5-6 years, but just to be clear. But I think, of course, we had a period, but I think you need to look into also what happened in the market. We tend to forget we had a large financial crisis at this stage that took down overall consumption. I think I also mentioned it that from 2006-07, we've seen an increasingly space increase in the market from us and from competition, and of course that put pressure on your like-for-like number. I use just from an internal perspective. I think I said that several times. I think 2005-06 we had 4 or 5 stores in the Stockholm region. Now we have over 15, and of course that put pressure on the Gallerian store as an example, versus it was more alone previously. So, but from a total perspective, we are growing and we are gaining market. But we've been into a kind of a retailer do. They go through different phases. One of the phases was to strengthen the store network, and that in that perspective it has some impact when we're adding more stores in the same city. It has some impact on the like-for-like number. At the same time, we've seen a major increase of competitor sales space out in the market. So we as consumers has seen much more to offer and much more choose to or much more selection. And in that perspective, I think we've handled it fairly well. And now adding on a financial crisis on top of that, of course, then you get the numbers. I think we went through some of that. I think if you look at it, the recent years now, we've not seen that kind of drama from a financial crisis point of view. I think we have seen more of a slowdown in terms of the increase of sales space in the market, and hopefully we're also doing some positive things internally as well to meet the customer and their needs. I think we've seen a positive effect out of that.
Great, thank you.
Thank you. We have a question in the back again.
Yeah, first I just wanted to see how you define the market. Is that including food and everything? I guess if you compare to Swedish building and hardware trade, for example, was up almost 20% at the end of last year. So from that perspective, it seems that you
No, you're right, and we're not defining it with food, and we are taking out the categories, the subcategories that we are in. But of course, if you look at the building and construction, we're also not in the building and construction part in terms of the what I should say, the bricks and these kind of items. So we are trying to narrow it down where we can narrow it down in the market. But having said that, it is generally difficult for us to get out clearly market shares in the Nordic regions because there's no really good measures. We have to keep on the total numbers and look at the total numbers.
And you are sure you took market share in the previous quarter from that perspective then?
From that perspective, yeah.
All right. Yeah, now I lost it. Okay.
We'll come back. Let's include Göran in the Q&A session on the details. I would like to ask you, probably just poor forecasting on my behalf, but I think the US dollar was probably up well over 20% when you bought the goods that you delivered the next quarter. But stock in trade is only up 6% year on year. I realize that you don't buy everything in dollars, but could you make me understand? I was actually expecting a much higher stock in trade reported in Swedish currency.
I mean, we're trying to be as effective as we can regarding the inventory levels. And to some extent, the inventory is increasing due to that we're adding more stores to the network. And on the other hand, we also have a US dollar effect. But you also have to remember that it started a year ago as well. But we're trying to be really efficient when it comes to inventory.
Mm-hmm. Obviously done a good job. Okay, stick around. Stellan, you got it.
Just was also coming back to the question on the like-for-like sales here. I think previously you said you would need price increases of theoretical price increases of about 15% to offset the impact of the dollar. And yeah, now it seems that you are at a stage where you have offset the dollar effect. So I'm just wondering, are you at all seeing any growth in volume in comparable store, or is that negative?
No, I think I'm not going to say that I've said that number, but I think, of course, if you look at the volume development compared to the total, it's very difficult to give you an exact number, because if we are measuring volume and how we are measuring it, because the mix effect is so much different versus last year. So I would say difficult to give you a correct super answer on that one, because if you look at the number of items we're selling significant more items, but also somewhat is reflecting on some of the smaller items that is new into the range.
So what you're saying is that you don't know your average price increases, or?
I did not say that.
But then it would be very easy to...
No, what I'm saying is in terms of how you compare volume in terms of number of items, or in terms of full size pallets, or in terms of kilos. So.
You choose.
Yeah, but we're not giving you that number.
All right. I'll leave the question for either two of you or both of you. Could you just help us understand, if not in very detailed numbers, but you reported a gross margin of negative 50 basis points now. Again, the US dollar is probably a major negative component in that number. Could you give us some sense for the scope of the other margins? So the contributions from, let's start with cost of goods, sourcing in China, etc. Is that less expensive in absolute terms when you bought the goods that you delivered this quarter? Was buying costs down?
No, I know you're trying to narrow down some of the areas we're not disclosing. So if you're giving that, then you're trying to get out and back calculate in terms of the question Stella is asking, how much have we increased pricing? And you have to respect that we are not announcing that due to competitive reasons. So, but I think we are clear in terms of we have been able to mitigate the impact at this stage, and part of that, and I think I've been very clear on that, we are very pleased on the efforts we've done on the sourcing, and that is giving a positive effect.
That's perfect. That's what I'm looking for. Hedging. Could you put a number on the hedging effect in gross margins? Is that something you're willing to do? Is it a major contributor to gross margin performance or less so?
I mean, during the Q3, it's been a major support to the gross margin, yes.
Okay, thank you. I think, I'm not entirely sure, I'm not going to put the words into your mouth, but I'm under the impression that you are at around 30% private label share, perhaps at least in the past quarters. Is that somewhere where you are right now as well?
No, I think we can be, I think last quarter I said we had an all-time high where we actually went above 30. Quarter 3 is somewhat, so compared to quarter by quarter, we are not at that level, but we are better than last year, and we are more or less closing to our 30 level versus, we said we're going to be between 25 and 30, we are now more close to the 30s.
Okay, very clear, thank you very much. Okay, so is there any final question from the floor, please? Yes.
I'm just wondering about differences between countries. I've been looking at Norway for many years and waited for them to buy as much as in Sweden. They might have done that had the Norwegian krona stayed at 120. What is it that makes Norway such a large market with a bit more than half of the Swedish population? Are prices higher in Norway? Are they buying more from items? What is the difference?
I think you're right on it in terms of that the difference is really that we have a very strong position in Norway, and from a consumption per capita it is actually higher. We have a higher ticket value in Norway.
Maybe the competition is much less in Norway compared to Sweden.
I think our competition is also increasing in Norway, and we have strong competitors in Norway. But I think also in terms of the structural, we have the structural network of store fits Norway well for us, where we have smaller shopping areas, where they have smaller cities, where it fits out very well for us to have a store in. So if you look at the number of stores per capita, of course that is significantly higher than which means which relates to that our kind of city concept works very well in the Norwegian market.
But prices are not higher in Norway.
Well, no, I think if you look at it apple to apple, I think the pricing is a product that costs around 10 Swedish krona, costs around 10 Norwegian krona as well, more or less. You have some market adjustments, but in general.
All right, I get the signals that's a wrap. Thank you very much for allowing me to moderate the Q&A session today, and for a good presentation as well. And I hand back the word over to someone else, do I? Back to you, Clas.
I think we then close it. Thank you very much for coming. I think we are, as you've seen, and I always would like to say that, we are cleaning up for the from the winter, now open up the store for all the spring activities. So of course you're welcome for you who are here to shop around. Thank you very much for coming. Thank you.